Are you tired of paying hefty taxes? Discover the secret to saving up to 70% on your federal taxes with the beneficial Spendthrift Trust. Join Sally Gimon on this eye opening episode as she reveals how this trust can transform your financial situation. But be warned, the consequences of not implementing this strategy may leave you with a massive tax burden.
Welcome to Biz Help for You with host Candy Messer. Entrepreneurs like to focus on the big picture, like profitability, success, and a smooth running organization. But there always seems to be those little things like taxes, employee compensation, laws, regulations, and more. Now you can get the answers you need in one place. Join us today as we break it all down for you. Now, here's your host, Candy Messer.
Hello and welcome to Biz Help for You with Candy Messer. Thank you for joining me today. If you missed my last episode and would like to listen to the show, links can be found on my social media pages as well as multiple favorite podcast platforms. And if you'd like to receive notifications on when my podcasts have been uploaded, please like and subscribe. Now, let me tell you a little bit about my guest today. Sally was motivated to become a real estate investor when her mom became sick in 2018. Sally was 53 and needed to make a change in her life quickly. She has been an insurance agent for 20 years and has used her experience to make positive changes. Now she shares her information weekly in her real estate group and Win Win Women TV. In July 2020, she bought a bank-owned property for $20,000 that would go to auction for $50,000 when COVID restrictions lifted. She knew her capital gains would be $7,140 and researched how the rich paid so little in taxes. This led her to find the business and beneficial Spendthrift Trust. So, Sally, welcome to the show.
Thank you for having me, Candy. I appreciate it because so few people know about this.
Well, I don't think I had heard about it. And if I had heard this term, I don't remember hearing it. So it's going to be informative for me as well. But before I get into questions that I have for you on this topic, I'd love for you to share just a little bit more about your story and how you started educating others on the Spendthrift Trust.
Great question. I became a real estate agent in December of 2018. Not trying to crow, but I did well. And when I did my 2019 taxes, I had to get on a payment plan with the IRS because I had done wholesale deals, so many wholesale deals. I had to pay capital gains and I didn't have the money. Scary time because I had to, every month there was a check to the IRS. In my national real estate group, one of the national instructors, his name is Garrett Gunderson, he wrote a book called What the Rockefellers Do. I had read the book before I joined my real estate group, and I went back and scoured it because the Rockefellers Trust is the same Spendthrift Trust. They call it the office. It's 7 generations old. They have almost 400 people under the same EIN or employee identification number saving taxes. And I'm like, well, if the Rockefellers can do this, why can't I? So this is April. I'm reading the book, trying to figure things out. July of that year, I bought that house for $20,000. That's going to go to auction for $50,000. Remember, it's the middle of COVID. Things aren't moving very quickly. I found the law firm, became their client, and then I became certified to start selling the trust for them. In my Phoenix group of real estate investors, I was the first female to do a mastermind every Thursday, 6 p.m. to start talking about it because, unfortunately, with being an investor, there's short-term capital gains, there's interest income with my notes, and then rental income people can save with this. So I started teaching in my real estate group. And then I decided people were reaching out to me because they also have 1099 income. Unfortunately, it does not help people who have a W-2 income. But several of my clients in my real estate group also, like one gentleman, he had his own Ace Hardware, like he's running 2 Ace Hardware stores. He's like, I'm getting killed in 1099 income. I'm like, well, there's a business trust. So this is how I started thetrustisyou.com to help people because if the Rockefellers, the DuPonts, and Carnegies know this, why can't you, Candy, you and I know this too? Because personally, I've saved quite a bit of money in 3 years having my trust. And I want to share that information.
Well, and I think that's why it's so important to have this conversation so people are even aware of what's available so they aren't overpaying in taxes and can find, these things that are going to help them as well. So I'd love for you first to talk specifically, what is a spendthrift trust and how does it differ from other types of trusts in terms of like the federal tax savings?
Great question. 97% of the trusts sold in the United States, my mom and dad had this, Susie Orman talks about it on TV, is a family trust. This is just for the people who set it up, and it's good. It avoids going through probate, and then it dissolves and it's over with. This is not your mom and dad's trust. This trust comes from England way back when King Henry VIII started the Church of England. He's the king who was chopping off his wives' heads, because he wanted to divorce them. So instead of murdering them, he started the Church of England. He went to go tax the lords and ladies of England. They went further back to history, to the Magna Carta and its case law. It came to the United States when we were still a colony. The law firm I work on behalf of has inherited a trust that is going to turn 350 years old in 2023. This is in the IRS tax code. Most people don't realize the current tax code only went into effect February of 1913, and it was supposed to be 6 years. The federal government was broke. We were getting ready to get into World War I. The Barron families, the Carnegies, the DuPonts, the Kennedys, and the Rockefellers purposely put this way up in 643B of the tax code. I can't be an accountant. I'm dyslexic. I transpose numbers. But the majority of CPAs work in the 300, 400 level. That's where most 1040 tax returns are done. This is very specialized. Very rich families have this. It does file a 1041 tax return, a little bit different than a 1040 tax return, better tax laws for that. And, my goal, just to give you an idea, there's 7 different layers from 10% to 37%. There's 7 different tax codes and 4 ways for you to file your taxes. So it's purposely confusing. Just to give people an idea, when I had to get on my payment plan with the IRS, I was working full-time as a Medicare broker and working part-time as a real estate investor, and I was at 24%. If I wholesaled a house for $50,000, I would have to pay $11,000 in short-term capital gains. I mean, no one taught me that. You don't know about it until a year later. For 1099 and business owners, for the business trust, I can legally say they're going to save at least 70% year after year after year on their federal taxes, 1099 income. Most of my clients, including myself, in 2022, I saved 92% on my 1099 income. One of my clients here in North Carolina, Charlotte area, he has 2 pizzerias. He and his wife work the 2 pizzerias. They make about $15,000 a month in 1099 income, about $180,000 a year. At 70%, they're going to save over $21,000 every single year. His plan, 2024, he's going to open a 3rd pizzeria. In 2025, he's going to open a 4th pizzeria. They're going to work until 2033, that he's going to retire, leave 2 pizzerias to one child and 2 to another child. They won't pay inheritance tax, and they too will save 1099 income year after year. He's told more people having small businesses in the Charlotte area, it helps people save so much money. And it's legal, it's patented, it's in the IRS tax code. And the first page of the IRS tax code says it's up to each individual to save as much as they can in taxes. No one talks about this. We're not taught this in college. CPAs don't know about it. If your CPA or your financial planner tells you I'm lying, a textbook that attorneys study in law school, I'm not saying for you to get it, but a textbook is Scott and Asher on Trust, 5th edition. This is what attorneys study in law school. And there's a chapter about the Spendthrift Trust in there. That's the only time it's ever mentioned. And most people don't study it, unfortunately.
Mm-hmm. Well, and you were saying like 1099 income, right? And you're talking about business owners. So is it actually also income that flows through like on a K-1, or is it really something that's reported as a 1099? Like what is the income that really qualifies for this trust?
Correct. So the business trust is for 1099 income. The beneficial trust is for investors. The majority of my clients have one or the other. I do have both because I run 3 online businesses. I sell online education. I just sold something this morning for $1,000. Woo! I'm $1,000 richer. So, but my 1099 income's that way. Unfortunately, W-2 income is not put in there. In my real estate group, my Phoenix real estate group, I have, now it's only 5 teachers. 1 teacher has retired and 7 nurses. They're making W-2 income as they're working, but all the real estate, the 1 teacher who's retired, she's retired. She's getting a pension from the county, But her real estate, she's got 9 Airbnbs. All that money she's making in her Airbnbs are going through the beneficial spendthrift trust. The pension, I can't help her with, if that makes sense, because
Mhm.
that's through what she did with her union and everything. So affiliate marketers, a gentleman who sells commercial lighting. These are clients who have 1099 income that are saving thousands of dollars every year. Just so you have an idea, Candy, one of my clients, she's a real estate agent here in the Charlotte area. Last year, she files her taxes divorce. Her children are grown, so she files single. She made $70,000. She knows she's going to save about $7,800 every year, with the trust. She's got 4 properties on the market in the Charlotte area. One of her properties just sold on August 31st. She closed it, everything else. She made over $16,000 in commission on that one property, and she's going to save 70% of the 1099 income on that, at least. I tell people that's the starting point. It will be higher, but I can't give you the exact number. And she's like, that just helps me get an idea how much I owe on taxes. Are you a 1099 income earner, or do you do quarterly taxes for yourself?
Right. So, that's why I was asking if it's only like 1099, if it's really K1, because as officers of an S corporation, right, the profit flows through to us. We pay the tax on our personal returns. So it's technically on a K1, but it is considered self-employment on our return, right? Because it's additional income that we earned.
Great. That brings up something else. Congratulations on having it set up that way. I'm not telling you doing things wrong, but the Spendthrift Trust is on the federal level. So it's federal taxes. LLCs, S Corps, and C Corps are statutory law on the state law. So they cannot be put into the trust. You would just transition, that first property, the Rocky Mount, North Carolina property, I had in my LLC. I did 2 simple bill of sales, one bill of sale from the LLC to my name, the second bill of sale from my name to the trust, went to the bank, got them notarized. I handed $10 to the banker. They made a note. When they did the second bill of sale, she handed $10 back to me. I'm in Phoenix. I scanned them, sent them to the attorney in Raleigh, North Carolina. The only thing he asked me for is the first page of my trust. On that one house, I got to save over $10,800 in short-term capital gains. What will happen with being a business owner? You'll open up a new bank account under the new EIN. All your money from the business will go through the business account. You will have a debit card, but it will pay for the mortgage on your house. It will pay the lights on your house, the electricity, the gas, the garbage pickup. If you want to go to, I don't know where you shop, let's say Safeway. You want to go buy food. If you have the business trust, you would just use the debit card and swipe the debit card to pay for your food. If you want to go out to the Olive Garden, you'll use the debit card, swipe the debit card for what is going through the trust on that. The one big difference when you have the beneficial trust, I don't want to get confused, but it doesn't cover on the beneficial trust your food, fun, and fashion. On the business trust, there's no problem with that. So again, sort of like what you're doing, you'll no longer do K1 that due March 15th. You'll be filing a 1041 tax return. When you start having the trust, the law firm, there's an entire team that works with you, and we have CPAs who know how to file the 1041 tax return. And if you want to stay with your own CPA, they will teach your CPA the right paperwork to file it, because very few CPAs know how to do this, if that makes sense, because they're not trained to do it. But if you don't mind my asking, do you have any business credit on your C Corp you have right now?
Yeah, so I never registered with like Dun and Bradstreet per se, but in terms of like I have a business credit card, I have all the business bank accounts, and of course with vendors having had relationships and being able to pay at certain times, so that I do have like that type of credit. But I never went to Dun and Bradstreet and said, here, set up a profile for me.
Correct. And you can, exact same thing you're doing with your C Corp, you'll do it with the trust. I had to buy $50 worth of light bulbs 3 months in a row at Granger to start building up the thing. So I was eBaying everything on eBay. Yeah, take these light bulbs. I don't need them, But you can build your business credit, and that's some of my clients will hold like maybe they have an S Corp or a C Corp that has business credit, and they want to hold that until they build up the business credit in the trust. Only thing I don't like about that, and I let them know, this is keeping them open, because no matter which trust you get, the 3 things it's going to do for you. Number 1, save you federal taxes year after year, generation after generation. Number two, it's going to keep your information completely private. I don't want to give you bad information, Candy, but depending on how your state does your C Corp, I can write a Freedom of Information letter to the Secretary of State or the Corporation Commission and say, tell me about this C Corp, and I get all the information. This will not happen. And then the third most important thing for the trust, you will not pay any judgments if you get sued. It can't stop you from being sued, but it could save you thousands of dollars. So what will happen with some of my clients who keep their LLC or the C Corp, it keeps them open to paying state taxes, K-1s and state taxes, and then also keeps them open to being able to be sued because your C Corp or your LLC does not prevent you from that. But I understand, if you've got one of my clients who's a real estate investor, he has 0% credit cards, $50,000 a piece. He's doing things with them. So he understands the risk. I have no problem. This is what you're up for. And he's slowly building business credit on the trust so he can get those credit cards on the trust too, if that makes sense. Because it's a whole different, how do I say this? A whole different identity than a Bradstreet identity because you have a new EIN.
Right. It's always tied to your business name and tax ID number, right? And so
Exactly.
if you're opening a new one, yes, you're starting fresh. But is this mainly then for people who really have like real estate investments too, and that's the main benefit? Or is it really just anyone that has any type of 1099 income and they don't own any property?
Correct. The beneficial trust is for investors. That's where I come from. But I do work with business brokers. Here's something I do want to, because you have a lot of people on your podcast who are small business people. Do you realize when you sell a business in the United States, I don't care if it's a mom and pop restaurant, if it's an Amazon store, an HVAC company, you're going to take what you paid for the business, what you sell for the business, and in between, you're going to pay either 15% or 20% in capital gains next year for the sale of that. So, with the business brokers, one gentleman who sold a restaurant, $3 million, everything's in it, 42-year-old restaurant. This is a great story. His wife knew about the trust. They sold it March 30th. She knew that what was happening. She didn't know at 15%, they were going to save $460,000, six figures on that $3 million. That changes your retirement. And at 20%, $600,000. The day of the closing, I get an unlisted number from Kentucky, and I'm like, okay, let me pick it up. She's crying happy tears. I have never heard of the show. Do you know a show called My Lottery Dream Home on A&E television? They're moving from Kentucky to Florida to be near their daughter with their 3 grandchildren. And she wants to call Dave and say, we want a 2-bedroom, 2-bathroom condo that's between $460,000 to $600,000. I mean, that changes. He's 69, she's 67. That changes their retirement. Then the business broker, Sam, who organized this, he says, well, the gentleman who's buying the restaurant, this is going to be his seventh restaurant. He's making all this 1099 income. Sam, the business broker, sold that gentleman business trust, and now he's saving all the 1099 income that he gets from his seven restaurants through the business trust and using the money. The money you save, you could pay off your mortgage, you can buy a new car. It's your money to do what you want with. A lot of my clients are setting up nonprofits to help other people because, they've gotten a better life. They want to help other people too. But it's 100% your decision how you use it. Roberto with the 2 pizzerias, he's going to open up 2 more pizzeria shops with the money he's saving. Great. He's going to bring in more money and make his life. It's just win-win for everybody.
Right. Well, and you did say this is like a federal law. What about the states then? How does that affect your taxes in terms of your state filings if you're in a state that has income tax?
Great question. I moved here to North Carolina last year. I did not file North Carolina state taxes for 2022. North Carolina is not aware I'm here. I have clients in New York, Illinois, and California that have state taxes. One of my clients in New York, he's an affiliate marketer. He sells online weight loss supplies. He's making over $500,000 a year doing what he does. He is going to save 10.4% in New York. He is saving more money than what the trust cost him in the first year. He's just like, this is great. His wife is a real estate agent, actually a real estate broker. Her 1099 is going to go through the trust. The gentleman from Chicago, this is a kind of funny story. He saw a YouTube video. He only works 3 days a week. He sells commercial lighting. And he's just like, I don't want to, he goes, I know how much money I'm making. I'm paying so much in taxes. When I told him how much he will save, plus 4.95% in Illinois taxes on his salary because he won't file state taxes. He's just like, now I'll work 5 days a week instead of 3 days a week. I'm like, okay, good for you. You'll work harder, but it can save you thousands of money in some of the states that do have taxes. You're not going to be tax free. It's just income, or it's capital gains, interest income, dividend income, rental income, and royalties on the beneficial trust, and then your 1099 income. So you still pay food tax, you still pay going to the movies, you're still being taxed. You get taxed on all kinds of things here.
Right. So there is still a benefit through the states as well, but it's just not as much maybe as what it is on the federal side. But a savings is a savings, right?
Exactly. One of my clients, kind of a sad story. He's a real estate investor. Last year, he went to a church picnic and someone made deviled eggs. He got 4 of them. Unfortunately, the person hadn't washed their hands. He had the trust beforehand, doing everything there, but he has to get on kidney dialysis. When they're looking at his tax returns, they're looking at the 1040 tax returns, not the 1041 tax returns. So he can do as much as he wants with the trust and not get concerned about it to be on state access. They were looking at his Social Security number. His dialysis is costing him over $10,000 a month, and the state's paying for it. And he's like, this is saving me so much, helping him survive. I mean, he needs a dialysis, unfortunately.
Mm-hmm. So what is the cost of a spendthrift trust then? And is it a one-time fee? Are there like maintenance fees every year? Like what is it that someone would be investing in this, just so they know what that price might be?
Great question. One-time fee upfront, and it has to be either wired or cashier's check because too many people can cancel the credit cards. It's $20,000 for one trust. If you decide you want both trusts now, or maybe 10 months down the lane, get both trusts, it'd be $37,000 for both the business trust and the beneficial trust. But one trust, $20,000. It's a one-time payment. It's going to be from generation to generation. The team is going to work with you to help you transition everything over, here to ask you questions. The only other thing you will pay for is to pay for the CPA to file your taxes. Personally, I shut down six LLCs. So to pay for the CPA, it's cheaper now that I have the trust because I'm not doing 6 K1s March 15th, then my taxes April 15th. So it's cheaper than that. But like the Rockefellers, 7 generations, they started a one-time payment and it's going on for 7 generations. It's an amazing thing. Mm-hmm. I'm not trying to crow. It's been 3 years. I started my trust September of 2020. I just did another real estate deal last Friday. So far, I've got 12 notes, mortgage on the house. People pay me their mortgage. I've done 29 wholesale deals, and I run 3 online businesses. In 3 years, having the trust, I have saved over $177,000 just doing that. The first house, that Rocky Mount, North Carolina house, I only saved $10,800. I hadn't paid off the trust just yet, but every transaction after that, I have paid for both trusts 10 times over easily. I mean, it's just saving me thousands and thousands of dollars.
Mm-hmm. So are there any legal risks, to putting something into this trust too? I mean, we're talking about the benefits, but on the other side of the coin, like, are there any type of things that they need to be worried about or limitations that they need to consider?
You're asking wonderful questions. I need you to come on the podcast with me more often. Actually, there's not. People, I have people saying, oh, it's irrevocable. You can't get things out of it. So like that wholesale deal I just did this past Friday, I won an upset bid here. I made one phone call. I'm wholesaling it. With that, because on the beneficial trust, it's the actual cost I paid for it. So I paid $270,000 for the house. I'm selling it for $310,000. So that $270,000 is what I can do, the demand letter with the beneficial trust for my food, fun, and fashion up to that. The higher price is not that way. When I sell that house at the end of the month to the gentleman, it's going to be the Spendthrift Trust. I'm going to sign it as a Spendthrift Trust, sort of like how you do with your corporation. And then he will get the real estate. So I can move things into the trust and move things out of the trust with no problem. The law firm that I work on behalf of, it has the patent on this, a 71-year-old patent. It's called the Benson Financial Trust. Paul Benson was a Harvard law professor, and then he started a law firm with his partner. It's now the grandson who's doing it. The entire time that they've had this for 71 years, only once one of their clients said that the IRS wanted to look at that. They came to the law firm. They put everything in front of it. The IRS agent came in. He looked at the front page of the trust. He checked his book. He's like, okay, thank you, and walked away. So it's never been audited. I'm going to say something very political, and I don't want to cause a controversy here. But our former president, Donald Trump, his dad started this trust back in the 70s. So far, they have not pierced the veil of the trust. They're trying to get, pierce it. But people around Donald Trump have gone to jail. But Donald Trump is Teflon. Everything's going after him. I don't know. There's so many court cases. I can't keep track. But so far, nothing has happened to him. He's done, I don't want to say this about former president. He's not done some smart things. So they might be able to pierce it. When you do fraud, the veil of the trust could be pierced, but they have not pierced the trust yet. So I'm watching this very closely, not because of politics, but because of, I know he's done this in the trust. But, the rich families know about this. I have 3 articles from Forbes that I send to potential clients. And in every single article, it says people who are making more than $1 million. Like, just a real estate investor, you do 2 deals and you've got paid for. Somebody making $70,000 a year, 1099 income, it might take them a few years. The real estate agent I was telling you about, she's 42 years old. She plans to do real estate for the next 20 years. It's going to keep paying her back when she started this trust, if that makes sense.
Mm-hmm. Right. Well, I know we're running short on time, yes. I'm sure that this is kind of confusing, maybe, or overwhelming for people who are listening because they've never heard of this before and they can't grasp, everything just in this short period of time that we have. So I was wondering if you have an offer or information that you can share with our listeners, and also how can they connect with you if they want to touch base?
Thank you, Candy. My website, thetrustisyou.com. When you go there, I will email to you an 18-minute video of my slide deck showing how I'm saving money and how other people are saving money, so you can watch it on your own time. You can set up an appointment with me. When we have the 30-minute tax breakthrough session, the 2 things I'm going to ask you, if you don't know your tax bracket between 10% to 37%, I'm going to ask you how much money did you make last year so we can figure out the formula, and how you file your taxes. Do you file it single, head of household, married jointly, or married separately? And so each person's going to have their own, tax breakthrough session, explain what it is, give them an idea. And if they want to go forward, excellent. If they don't, at the tax breakthrough session, I'm going to give them 2 pages of case law to prove to you it's gone through the Supreme Court twice and state tax, all the other case law. I will give you a copy of Garrett Gunderson's book. It was formerly called What the Rockefellers Do. He had changed the title to What the Billionaires Do, and answer your questions, because people have never heard of this before. They do want to talk to I want to make sure both husband and wife are on the Zoom, or they both know what's happening, because it is a change in life. You will change things over, set up a new bank account, but it will only change your life for the better. I mean, if you can save 5 figures a year, 6 figures a year, 7 figures a year, just think about it. I'm not trying to crow, but in 3 years, I have saved 6 figures in federal taxes just with what I'm doing. That deal, that wholesale deal I just did on Friday, the capital gains, the short-term capital gains at 24% on that is almost $8,900 on that deal that I'm saving just on that one transaction. I love it. I love working with the trust.
Perfect. Well, thank you, Sally, for sharing on this. I mean, everyone wants to know how they can save money on taxes and use that, for other things in their life. So I appreciate your talking about this, because again, it's something that I don't remember hearing about, or if I did, I forgot about it. And I'm sure most of my audience, it's the same.
Well, I appreciate you having me here, Candy, because again, most people don't know this. I had Garrett Gunderson teaches at my real estate group, has probably about nationwide, has about 80,000 people in it. Why hasn't someone else figured this out on their own? I mean, that's, I appreciate you giving me the chance to tell people, because if I can help other people, it's a win-win situation for everyone.
Exactly. Well, thanks again. Appreciate your time.
Thank you.
Thank you, listeners, for tuning in today. I hope you found this topic interesting and enjoyed the informative discussion. Would you please share my show with those you know and leave a review on your favorite podcast platform? I'd really appreciate your support. If you have any additional questions or comments, be sure to reach out to my guest at any of the links that they shared, or you could send me a message at media@abandp.com. I hope you can join me for my next interview, and remember, you can connect with me on Twitter, Facebook, and LinkedIn, and my website is abandp.com. This episode is sponsored by Affordable Bookkeeping and Payroll Services. If you are overwhelmed trying to handle the financial aspects of your business, AB&P is here to help. Contact us today to discuss your needs at 310-534-5577 or contact@abandp.com. My team and I are eager to assist you. Until next time, have a great day.
Thank you for listening to Biz Help for You. Please join your host, Candy Messer, again next time. Have a terrific day.